Good morning, Hong Kong, and welcome back to another episode of Hong Kong Insurance 101. And this week, we're going to be talking about directors and officers insurance. Also known as D&O insurance or just directors insurance, this type of coverage often sits alongside professional indemnity insurance in a company's risk management toolset. So what does D&O insurance actually do? Simply put, if a director and or executive officer in your organization is accused of a wrongful act, then the insurance will assist the business in relation to any losses you may experience as a result of that claim. This includes things like legal judgments and damages in the form of financial compensation, the cost of retaining a legal team to defend your company against the claim in court, tax contributions where a company has become insolvent, losses within 30 days of a buyout of a subsidiary organization, exposures the organization may have to North American markets, and civil fines and or penalties. The coverage under directors and officers insurance is actually fairly broad and becomes even more interesting when we look at the types of claims that it will insure. Remember, this type of insurance covers businesses against wrongful acts of directors and or officers of the company. And for most D&O policies, the wrongful act terminology is actually really extensive. Breaches of trust, misstatements, defamation, breaches of duty, violations of the company's ordinance, and even violations of the Sarbanes-Oxley Act are all potential wrongful acts that would be covered under D&O insurance. Furthermore, many D&O insurance plans will also have clauses that provide for coverage of any matter which is claimed as the result of a director or executive officer of a company acting in the official capacity of their job. This could include employment-related wrongful acts like employment discrimination or even whistleblowing. As we mentioned previously, standing alongside a business product like professional indemnity coverage, directors and officers insurance is a fantastic tool with which to fully protect your company against the actions of key and critical employees, and is especially vital for service-based organizations. In terms of cost, this is another Hong Kong insurance product which will have its premium calculated based on, primarily, the annual revenues of the organization in question. As such, bigger companies with more risk exposure will pay a higher premium than smaller companies with fewer employees. Following this, claims coverage will be higher for larger businesses than smaller. That's us for this week. We hope you have a great weekend. Please remember to like and subscribe to stay current with all our latest content as it drops. And don't forget to ask CCW. We're simplifying your insurance.